Most people think they understand how mortgages work. Most people are wrong. Because when you buy a home, you are not just buying property. You are entering a long financial structure, a structure built on leverage. Every payment moves money, but not always in the way people believe. So the real question is not, can you afford the payment? The real question is, what structure are you entering? Because in the early years of most mortgages, the majority of your payment goes somewhere unexpected. Not toward ownership, toward interest. And that structure does not exist in isolation. It lives inside economic cycles, interest rate cycles, credit cycles, market cycles. Over time, these forces shape how equity actually builds. And in the early years, equity grows far slower than most buyers expect, because interest dominates the structure. The payment looks simple, but the mechanics underneath are not. Principal builds slowly, often much slower than people assume, and the structure changes dramatically between a 15-year mortgage and a 30-year mortgage. Lower payments feel safer, but lower payments often mean something else. Longer exposure to interest, to risk, and to the volatility of the housing market itself. Because during certain years, liquidity becomes limited. Selling is harder. Meanwhile, the public conversation focuses on headlines, housing crashes, price surges. But headlines are noise. What actually matters is structure. Because even a 1% change in interest rates can reshape affordability completely. And over decades, small differences compound into large outcomes. Housing markets are not driven by headlines. They are driven by structure. Supply, demand, credit. And over time, these forces diverge. Agent Casts exists to analyze those mechanics. Calmly, clearly, without noise. Because when you understand the structure, everything changes. Agent Casts, structure over noise. Subscribe and start seeing the housing market differently.